Hey, welcome to The Explainer. Today, we're going to dive into a massive idea from Robert Kiyosaki's Rich Dad, Poor Dad. It's an idea that might just change the way you look at your paycheck forever. We're talking about why the rich seem to play by a completely different set of tax rules, and, most importantly, how they do it all legally.
So let's start with the question that drives a lot of people crazy. You work hard, you look at your paycheck, you see a huge chunk just gone before it even hits your bank account. And then you hear these stories about super wealthy people paying next to nothing in taxes. How on earth is that possible? It just doesn't feel right, does it?
But here's the big twist from the book. It's not always about cheating or breaking the law. It's that the wealthy have learned to play the game of taxes using a completely different rule book. A rule book that's available to everyone, but that most of us are never taught to read. They're playing a different game on the exact same field.
So let's get into it. Section 1, a different set of rules. What are these rules exactly? Well, to really understand them, we've got to take a quick trip back in time and see how this whole income tax thing even got started.
You know, it's kind of wild. Originally, there wasn't a permanent income tax. The government only taxed people to pay for wars. The sales pitch to make it permanent was basically a Robin Hood story. Let's just tax the rich to help out the poor. And so the middle class and the poor voted for it. But what happens when the government's appetite for money keeps growing? Well, that tax started to trickle down, and eventually it started hitting the very people who voted for it in the first place. So while the middle class started feeling the squeeze, what did the rich do? They didn't just sit back and accept it. Nope. They adapted. They used their resources to find a way to legally protect their wealth. And what was their ultimate tool, their secret weapon? The corporation.
Okay, Section 2, the corporation, a simple tool. Now, I know when you hear the word corporation, you probably picture giant glass skyscrapers and massive factories. But according to Kiyosaki, the real power of a corporation is how incredibly simple the concept actually is. Forget the buildings. A corporation isn't really a physical thing at all. It's just a legal document. Think of it like a file folder with some papers inside that creates a whole new legal person. This entity can't go to jail, of course, but it can earn money, it can spend money, and, this is the key part, it can pay taxes.
And this little file folder gives you two huge advantages. The first is asset protection. If your business gets sued, they can only go after the assets inside the corporation, not your personal home or your car. But it's the second benefit, the tax advantages, that's the real game changer we're talking about today.
Let's move on to Section 3, the two financial timelines. Now, this is where we get to the heart of the strategy, because using a corporation completely flips the script on how money flows. It creates two totally different financial realities, one for an employee and a completely different one for a corporation owner.
First, let's look at the timeline we're all familiar with, right? As an employee, you earn your money. Then, immediately, bam, the government takes its cut in taxes before you even see it. And finally, you get to spend whatever is left. It's earn, get taxed, then spend.
Now look at this. The corporation's cash flow is the total opposite. The corporation earns money, but here's the magic step. It spends money first. It spends on all its legitimate business expenses, cars, travel, equipment, you name it. And it's only after all that spending that it gets taxed on whatever profit is left. So it's earn, spend, then get taxed. The order is completely reversed.
And let's be crystal clear. This is not some shady, illegal scheme. As Kiyosaki points out himself, this is one of the biggest legal tax loopholes out there. The government actually creates these rules on purpose. They want to incentivize people to start businesses, create jobs, and stimulate the economy. The wealthy are just using the system exactly as it was designed. So here's what that actually looks like in real life. You, as an employee, pay for your car or your vacation with your after-tax dollars, money that's already been taxed. But for a corporation, things like a business vehicle, a board meeting in Hawaii, or a new company laptop can all be legitimate business expenses. They're paid for with pre-tax dollars, which in turn lowers the company's taxable profit.
And that leads us to Section 4, playing the game smartly. Because while this all sounds amazing, there is a giant, flashing, red warning sign that comes with this strategy. This is not something you can just dive into without knowing exactly what you're doing.
And this is absolutely critical. You can't just start a corporation and try to write off your personal groceries or your kid's birthday party. That is illegal, and it will land you in a world of trouble with the IRS. This strategy is not about cheating the system, it's about understanding the complex rules of the game and playing by them.
To do this the right way, The legal way requires what the book calls financial IQ. And it's not just one thing, it's a whole skill set. You need to understand accounting, investing, how markets work, and most importantly, you have to know the law. This is all about financial education, not tax evasion.
All right, on to our final section, Section 5, Control, not ownership. This brings us to the last and maybe the most powerful mindset shift from the entire book. It's the principle that underpins this whole strategy.
Think about this for a second. When you personally own everything, your house, your car, your investments are all in your name, you're a direct target. One bad lawsuit, whether it's your fault or not, could potentially wipe out everything you've ever worked for. This is a weakness the wealthy understood a long, long time ago.
And that leads to this powerful, provocative mantra from the book: own nothing but control everything. The wealthy use legal structures like corporations and trusts to protect themselves. On paper, the corporation owns the assets. This creates a legal shield around them personally, but they still have total control over everything. It's a huge mental shift from the pride of personal ownership to the power of control. So the final thought I'll leave you with is this. After seeing how the game is really played, are you still focused on just owning things that can be taken away? Or are you ready to start thinking about how you can control your financial future?